Hello guys, and glad to have you on board again today. It's going to be a long video because there are plenty of things that I want to talk about. The thing is that, well, as always, we're still trading on lower time frames, which means we're looking at flow trading, which is more intrinsic to volatility and all of these things. And just like I stated, and I teach you with the strategy, is that the most similar kind of context which you can evolve in is the range trading, when basically the higher time frames you could trade on is nothing but a range. Though in that perspective, the only reactions you are able to have are, okay, cool down. These structures are by definition chaotic, and therefore instead of trying to just melt my own brain, trying to make sense and try to figure out what's going to happen in chaos, I'll just embrace it, let it go with this idea, and instead of fearing of uncertainty, I will just embrace it and understand that the only thing that I can profit from in these ranging contexts is just to use Fibonacci retracements and wait for the market to go into extreme territory. You don't know how long it's going to take, you don't know when it's going to happen, you don't know how fast it will respond afterwards, and you have to be comfortable with it. And of course, like I said, the day you will understand that is the day you will start to be a real trader. Because unfortunately, we would all love to see trends all over the place because trends are the easiest things to trade. But the reality is that most of the time, the trends are either happening on larger time frames, which means you have to be real patient, second, natural traders' biases, or worst case scenario, there are no trends at all. And in that perspective, understanding how to behave in ranging, hesitating, chaotic context is number one rule to truly become a trader. The second thing is that, well, when there is a trend, when you have the luxury to have one, if it is on the larger time frames, which is generally the case, if you don't have the patience for this, or if you have to trade in shorter time frames, well, that means you're left with flow trading, which means you are trading the underlying volatility of that low risk trend. The true thing that you need to understand with that is that when you're trading flow trading, the only thing you have to deal with is volatility. It's slightly different from the uncertainty that you will have in a range, but it is kind of the similar point that we're into. It's far closer than trading inside ranges than trading inside trends. The difference between this is that in a range, there is no direction. The market is just trying to go up or down and fails each and every time, creating new boundaries afterwards. The thing is, well, on a flow trading, you have a low-risk identifiable strategies. You know which direction the market is likely or going to be. Few days, weeks, etc. You know that over time there is a slight asymmetry in the direction the market is likely going to head to. And that is significantly different. But the thing is, to add up and to compensate for that slight improvement, you will have to deal with the volatility, which means it mostly depends on traders' reactions. It's unpredictable by nature because volatility is how market makers deal with supply and demand asymmetries. And there is no way you can predict that. There are no tools affording you to predict that, and even the market makers themselves are having a hard time managing their supply over time in constrained volatility like that. So, of course, market makers do have algorithms to do this automatically, but these algorithms are infinitely complex. And they're getting more and more complex by each and every market cycle. So today, we will all agree to see that, well, most of market makers trade with AIs and stuff like that. And gosh, you as normal human being, you think you can predict that? No, fuck no. So try to be smarter than that. There is no way you can ever anticipate any of this. So just let it go. I know how painful it is, because so many people fell for these biases, natural noob biases of thinking that you can control or predict or whatever. Fuck no. Please let it drop out. If you trade flow trading, you have one advantage. You know that there are likelier probabilities for prices to go there rather than there over time. You just can't control the time, okay? And if you can't get comfortable with it, I definitely wish you could think of it twice, because there's no way you can be a profitable flow trader if you don't agree with what I said in here. Second thing, I'd like to remind you how to truly applicate that in a market is that, well, just like for dumb strategies, the rules are very simple and you just have to be you just have to abide by these rules and understand that they cannot predict the immediate reactions of prices. And the fact is that it can't be successful on one trade. It's just that over 100 trades, there's no way you can lose money with those rules. And that's exactly the same thing that I teach you with the flow trading native rules. That first of all, you need to identify the low risk strategy time frame. You need to trade 3 time frames below, because this is where there is the likeliest chance out of 100 flow trades to find the best risk reward ratios. And secondly, you need to follow a very dumb and stupid strategy out there, which is once you've got into that low risk area, wait for a first flow. The first flow is that you want to see the context channel rising above the moving average on this time frame. So I'm just 1 time frame above in here. Flow trading currently is happening in H1 time frame on the S&P 500. And remember though, I just want to see the moving average and I want to see the context rising above it, and the moving average has to be either flat or rising. So boy, first flow, okay, so I've got that. I have reacted in a long-term low-risk area, and I have started to see some inflows. That's the sign that the market makers will have to make prices higher in the future. That doesn't mean they will do it in a straight line. Like I said, it's both supply and demand mechanics of speculative traders over time, and no one can predict what the buyers and sellers will do. It depends on so many external factors, and boy, we had quite a lot of them recently. I mean, the stupid narrative in which the market is in, thinking that, well, the CPIs or whatever is going to give us the prediction of what the Fed is going to do, and I mean, this is absolutely silly. Just try to make it easy on you guys, okay? All of those CPIs and bullshit, it's just nothing but here to shift supply and demand on short-term speculative behaviors. If you are smart enough to understand that when you flow trade, you just try to average in and out those stupid speculative behaviors by knowing that you have one single advantage. You know that prices are likely going to increase rather than decrease, and you rather like to get exposed to upside potential rather than downside. The second thing that you know is that flow trading will normally create higher highs and higher lows in each and every flow sequence, okay? Third thing that you know is that the first sequence can behave either by buying the moving average or the volatility boundary after building a third range boundary, okay? So you wait for the third range boundary and then you buy either the moving average if it's still trading above, or you wait for the opposite Bollinger Band. Then the market will create the second flow, which generally terminates when there is a third range boundary again. Okay, and then you know that the third flow always triggers by the Bollinger Band. So you will wait for this area to buy, and you will buy. The third flow has to break the previous high point, which is the reason why I was still questioning whether we actually did trigger the third flow. And then, okay, same old story. As you break the high point, you wait for third range boundary and you get the hell out. And then the flow is terminated because you never trade more than 3 flow in the same sequence. The sequence is just higher highs and higher lows in between each flow. Though the thing is that in here, if I were to zoom out a bit, okay, and just to say, okay, we have a look at these flow trades. We had one in here, a second one in here. The third one is still questionably or not, because we can hardly say if we have broken the previous high points or not. But anyhow and anyway, what we're doing here is that we've gone back down to the H1 Bollinger Bands, okay? So that could be the reloading area for the third flow. Remember, the third flow is just you have to buy the lower Bollinger Band and wait for the market to break the previous high point. So we're loading in the same trades. So what the hell have I done personally? Like I stated, I bought all those lows in here, and then I bought all of these intermediate lows, because back then, like I told you, I know the H1 time frame is pretty damn noisy because the market is in a stupid narrative context, which means instead of buying the lows in one time, which I would love to, because just like every trader out there, I would love to buy the bottom and to see the market reacting immediately so that I can get out of the risk area and just pile up some gains. I would love to do this. The reality is that I have enough experience to tell you that this rarely is the case. Sometimes it is, and it is very pleasant, but you have to embrace chaos. Most of the time, well, you buy because you know that you have to do it, or you sell for whatever reason. And the thing is that basically it doesn't behave the way you would like to. And that is a pretty uncomfortable situation to be in, because most of the time you will say, why isn't it working perfectly? That means maybe I'm wrong, and you're falling down the cracks of uncertainty. The fear of uncertainty is pretty dangerous for traders that are learning or lack of experience into trading. And there is a very significant difference between these two things. There are overconfidence biases, which means, well, I know the market is going to go up. No, that's not what I do. What I do is basically I don't give a fuck about uncertainty. I just know my rules and I apply them. And I will apply them consistently. And the thing is that I also accept the fact that markets are chaotic. And due to the current chaotic context we're in, I will be a bit more flexible in assessing the market reactions. It isn't because the market isn't immediately reacting to my behavings that, of course, I'm wrong. No, that just says I'm going to have to give it some room to work it out, and then we'll see. Well, just like back then, I was swimming underwater, which is basically I've been trading 4 lots. Okay, so 1, 2, 3, 4 lots. First thing that I've done is I took some profits building the higher points of the range to reduce down to 3 lots, and had back then an average entry price there, which means half of the time was underwater. I was holding losses. Of course, I feared, just like everyone, that the market will just do this and take all my stop losses away. Well, like I said, I don't fear taking losses. It's part of the job, and I know a loss is just, well, that's what it is. All I know is that out of 100 flow trades, if I follow my goddamn rules, I can't be unprofitable. I can only make money out of 100 flow trades. It's just the way it is. The thing is that, well, that doesn't guarantee 100% success. Otherwise, I would be a billionaire. So that's not the way it is. You have to embrace risk. And sometimes the fear of, oh, I'm going to take a stop loss will be there. Just open your arms and just embrace it. I don't fear taking a loss. I know it happens. I know it's part of the job. And that's just not changing any of my decisions. Though back then, the second thing is that I told you I would trade it. Though 4 lots, which means I'm consistently bullish. But the thing is, boy, I need to average my pre-sale. So first taking profits. And then, like I said, I've done nothing but waiting for us to break above the previous high point, which was in here. And this is where I started taking another lot out of the table. And I said, okay, now if we have pullbacks, I will buy. The pullbacks will be, I'm going to buy every 1 hour signal as long as we have higher highs and higher lows. But this one in here took the profits in here. But this one in here took the profits in here. But this one in here took the profits in here. And in here, like I said, I've made quick trades in and out, in and out, in and out. Okay? But consistently, each and every time doing this pattern all along. Okay? Of course, each and every time I did partial profit taking, which helped me rising my prices, and I decided not to take my profits in here. That's a choice that I've made. Now we know this wasn't a good choice because all of the remaining trades that I had at break-even have been stopped. Not this one, but this one has been stopped, though I lost my gain, and this one as well. I've kind of lost my gains. The thing is that, well, we're back down to the lower Bollinger Band, and my current assessment is we never traded the third flow for now. So what the hell do I do? At a lower Bollinger Band, I buy again. First lot in here, second, third, fourth lot. So fourth new lots. Of course, all these ones are at break-even. Otherwise, I would be piling in the risk. No, I still take the same amount of risk. If I ever get an invalidation, I'm going to lose 2.5% capital. That's it. Terminated. Okay? Though what have I done with 4 lots? First things first. What do you think that I've done yesterday? Just like I did back then. Take some profits. I'm back down to 3 lots and I actually taken, no, sorry. I took a first profit taking in here and a second in here. So I'm right back down to 2 lots now with an average entry price, which is pretty much in here. What do you think that I have done yesterday evening? End of the first H1 cycle, I bought the hell out in. That's really as simple as it is. So I'm now 3 lots in, and you know what I'm going to do now. I'm going to wait for prices to go for the Bollinger Band. If they go for the Bollinger Band, I'm going to go right back down to 2 lots, and I'll be able to buy each and every H1 pullback if there is one again, okay? Until we break the freaking fucking high point. When we break the fucking high point, I will leave all my lots open until we get to the targets. The targets of a flow are always the same ones. A flow is meant to break resistances. So I think there is no way we can terminate this flow until breaking that 4,300 resistance. I think that's where we're going. Another very, very consistent type of target is prices generally breaking above the 4-hour context, the higher time frames context. So the flow trading is in H1 time frame. As we've seen, it's very noisy, it's freakingly complicated, and I could just be fucking wrong, and by 2 days from now, we would just be all the way down breaking supports. Yeah, we could do this. Like I said, if I am wrong, the next stop for this market is to break this low point and take every bull out the table. It is a possibility, and if it happens, I will be just embracing it. I don't fear of being proven wrong. I'm not here to say I was right. I'm just here to apply my goddamn rules. And that's just the way it is. The only comforting area that I am in is that I have done my due diligence lower risk analysis, though I know that prices are likely going to increase rather than the opposite. And that's all I know. All I know is that this is not a symmetric bet. I have more chances to succeed than the bears, period. That doesn't mean I will, that just means the odds are not 50-50. And I will take advantage of it by trading these sets 100 times and taking the rewards out of 100 trades. Okay? Think of it that way and you will be way, 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 way easier with risk managing. And don't fall for the cracks of willing to have prices rebouncing immediately to prove you're right, or do exactly this or do exactly that. Just try to remember what you're doing. You're in a consistently chaotic environment in here because you do flow trade. You know that there are asymmetric probabilities of price moving. You just don't know how and when they will move. The whole thing about volatility is that it flushes out all of those two possibilities. You just don't know how volatility will behave because it mostly depends on this. Volatility depends on the price acceleration, and you don't know why prices accelerate or not. You just know they are likely going to accelerate more in one direction than the other. You also know that these flow trades normally build higher highs and higher lows. So I would say for now, despite the absolutely horrific structure we are into, it feels like we're still having high highs and higher lows, and I'm not going to make it over intellectual. I'm just going to say, I don't know, yes, it's freakingly chaotic, so I'm going to adapt my risk management by, instead of having very nice flows straight line up, just like we've seen for cryptos, I know these flows will likely go ups and downs a lot of the time to maximize volatility and uncertainty. And instead of falling for that uncertainty, I just will accept it and trade it the way it is. If it ends up with a stop loss, well, that's it. That's the way it is. But to be honest, all of those comings and goings that I've made, ups and downs, picks and trough trading, all of these profits that I've been partially taking back then, they already cover more than I could ever lose. So the thing is that I'm already net positive in trading this flow. That's the way it is. That's the way it is. I took some nice profit on the second flow. I took some partial profit on this one. And even though some of them, most of them actually have been stopped at break even on the pullback in here, I am still anyway going to be net profitable for this flow trade. And that I hope you guys can understand. Okay, very, very important. There's another thing that I would like to share with you guys today is that, well, these are the things that you just can't use all on your own, but I'd like to state that yesterday's session, Powell speaking in front of Congress, or I don't know if it was Congress or whatever, but anyway, he's testifying, and he basically said exactly the opposite of what he said at the latest FOMC press conferences. Remember back then, it was all about disinflation is starting, whatever. And then yesterday he said, there's no sign of disinflation. I mean, just what the fuck are you saying? Just a few weeks from now, you were saying exactly the opposite. So stop being a switcher, Popo. Make it easy on everyone. But anyway, the only thing that these things create is volatility. What's staggering is that yesterday, I'm just going to not explain everything about this, but just to state forward, you would see that now the implied reward for bears trade, which means that is how much the market maker is going to have to pay the bears if it goes, for example, at a 3,600 or so. Okay, this is the SPI, so this is divided by 10. Okay, so let's assume we're breaking 3,800, which is where we see, that's where we're going if we're bearish. That means the market maker is going to have to pay $32 million of puts rewards, and that's the the net deficit, which means we're probably going to have hell a lot less of calls in this market being stopped out and a hell lot more puts in here. So that is a significant expense for the broker. And as you can see, well, there's just so many bears in here now. The asymmetry in this chart is staggering. Most of the time, you will see both of these curves kind of equilibrium. That's the sign that the market maker is net hedged on the delta and gamma risks. Well, in here we can see that this is not the case. The broker is not fully hedged, though it will have to either rebalance this thing, which is the likeliest outcome, or it's going to have to buy or sell the underlying asset, which means fueling even more volatility in the market. Normally, the second thing that we study in here is that we look at the volatility skew, and you would see in here the crazy fucking asymmetric there is. Most of the time in here, you will see curves like this, okay? And this one goes above. So normally you would see the volatility skew, the implied volatility measurements, basically crossing each other, okay? Now, as you can see, it's not the case. You've got the bears all across the board. So the bears' expected volatility is higher than the bulls on every price target, which is, I'm making things easier for you guys. It's absolutely not normal. The thing is that the broker normally will have to restore kind of balance, which means it's going to have to imply some volatility for the bulls to come in. Though generally what we do in here is that I have a look at the call implied volatility and I look at the lowest level that can be reached out to. And that's, well, somewhere in here. Damn, that was 17.21. Okay, it's at 4,180. Okay, so that's the level in which the lowest implied volatility for the bulls is. Okay, just note that one down. That's in here, 400. Okay, so that's where the bulls will be in control. Okay, this is where their lowest volatility for bulls, for puts, for calls options. Okay, but like we stated, now we're in over bearish territory. This is where we will go over bullish. So where's the middle? In here. Remember that few days from now, by the 10th of March, we're going to get quarterly expirations, which means we're going to expire daily, weekly, monthly, and quarterly expirations all in the same day. And I got them tell you that this asymmetry we have in here, the brokers are going to do everything they can to go at the equilibrium price. And I will bet that this will be right in the middle. So I think we're going right back up to 4,066 or somewhere around that, because that's where the broker will have the less impactful kind of expirations. Though that is very complicated to see, but as we're headed into closer and closer to expirations, I would like to state very clearly the brokers in here are at risk of either having to severely increase volatility by trading the underlying assets or just balancing again, which AKA, if I translate it into trading action, says one thing. Either I'm going to be stopped out a few days from now because the broker is going to have to flush its accounting and basically trade the stocks to the downside, selling stocks, and fuel more volatility. Option number two, we're still in an upflow and the broker will have to do what? Just flush all the extremely bearish sentiment there is by just going right at neutral. And if that's the case, that's somewhere around 4,050 and on the like. The broker will have to get us back there because this is where the sentiment is the most neutral. Both the bulls and the bears have struck some points and we're just set in between. I definitely think that's where we're headed. Though the reason why I said I am still cautiously optimistic as long as I haven't been proven wrong, and if I end up being proven wrong, I'm going to lose all my remaining gains and take a 2.5% loss on capital, which is still going to be covered by all the gains that I've made previously by far. So I'm not fearful of being proven wrong. I just keep consistently doing my fucking job. And I hope you understand the difference there is between being overconfident in the market, saying, I do this because I know the future, and I just do this because I have the confidence that anyhow and anyways, these rules have always brought me profits in the past, not out of a single trade, but out of 100. So that is the confidence that I have. I am confident enough with my rules. If you're learning them now, well, you will in the future. There's no other way around. You and I have the same rules. You can't get different outcomes than I do. The only way you can have different results than I do is if you put some psychological mismanagements in between. just because for whatever reason you think that this isn't going up as quickly as you wish, or is it going too much down when it means yesterday's candle is ugly as fuck. Yes, I agree with that, but to me it makes no sense. It's just volatility. I don't pay any attention to this. Maybe you are, and if that's the reason why you're going to trigger your profit taking or your stop losses earlier than you should, just because for whatever reason you felt like the market isn't going in the right direction that you wish, this is none of the things that I do. I never do this. I'd rather like to be stopped by the market rather than interpreting volatility and saying, yeah, maybe I should go out prematurely. I never do that. Okay? Only the market will take me out. And until then, I don't give a fuck about what Pablo says. I don't give a fuck about what people say about what Pablo sells in the social medias and the like. I just let the broker do its job. And all I can tell you is that the broker now is in a tricky corner. Either it's going to have to severely increase volatility, or it will just go and set the scores once again. You'll see all about that. But until then, like I said, don't fear of being proven wrong. Just work around your psychology. Learn a fucking strategy and be confident enough in applying it. When it comes to cryptocurrencies, well, what I would say, the context in here is severely different. In terms of cryptocurrencies, you can see the stupid volatility that we see in the crypto market, in the stock market, it isn't actually having any play in here. The structure is still the same in here. If we look at the flow trading, we have different flows. First flow was pretty neutral. The second was absolutely staggeringly bigly bullish. This could have been a third flow, and in that sense, well, cryptos are now consolidating, either flat or bearish. We have plenty of room to the downside. And in that perspective, this is kind of healthy consolidation before, of course, we trigger another set of 3 flows to the upside. I don't know, like I said, for cryptos. Option number 2, for now on, we still have high highs and high lows. So if that's the case, well, we could just, as long as we do not break and we make 2 sets of lower highs and lower lows, I would say, okay, we've had a pair of consolidative structures and we're good to go again to the upside. But now is why I am not extremely bullish on cryptos. I am just neutral. I don't overthink things. I just carefully will assess if we break that or not. And if we don't, and if we go up, well, the question is, are we going to make a new high or not? If we fail to make a new high and if we break the previous low point, I would say, okay, we had our 2 consolidative waves. Otherwise, if we do boom, and we go one more time making another high point, I would be, same old story, do whatever the fuck you want by trying to say, well, this is an expanding wedge parallel channel, whatever it is. I just give you my sentiment on that front. I don't give a fuck about that. The market does whatever it is that it do. What it think is, all I care about is as long as I have high highs and high lows, the flow trading is still going on. All right? The flow will terminate one way or the other. The recurring sequence that I teach you is that after 3 flows, there is a high likely opportunity to see the time in which the market will successfully be able to break your support. Okay? That's all you know. Though, in my personal opinion, I am not margin trading Bitcoins and Ethereum anymore. I am still trading Chainlink and GMX for totally different reasons. The low risk strategies in Chainlink are probably weekly or monthly bottoms in here, though same old story in here. I am trading flows on Chainlink. The thing is that there hasn't been a single flow triggered so far. So I am hoping that Chainlink will start to trigger the first flow in here. If that's the case, well, I think in here I had reasons to take profits on my Ethereum and Bitcoin margin trades, and I did very well on these. I still have no reasons to change my mind on the links. That's really the way it is. To me, Link hasn't either validated or invalidated any of my flow trades. So why the heck should I press the button because I think it isn't going well? I don't think. All I would tell you is that I have a fucking stop loss. Either the market goes for it or either the market will go in my way. What it does in between, and doesn't matter how long it is and how hesitant it is, I am not changing my mind. So why the heck do I still have trading margin exposition and Chainlink just because I've chosen to and I haven't been proven wrong so far? That doesn't mean I will obviously be proven right. That just means as long as I don't have the negative answer, it's positive to me. I'm always headed into positive. That means I don't care. To me, it's the Schrodinger's cat box. I've put in my money in the game. My money is at stake. I can lose it, and if it happens, well, no problem with that. I'll do exactly the same the next time around. And the thing is that until then, I'm not even thinking about doing anything but waiting for either validation or validation. Validation is breaking the previous high point. Invalidation is taking down my stop losses. And until then, there's nothing else I can do. So the only reason why I still have links trade is because they haven't been invalidated. And they haven't triggered either. So they're all in a pending mode, which I'm very comfortable with. I wish every day I could wake up and see a 20-25% up move in Chainlink for whatever stupid reason, because I don't care about the news flow. All I care is what the price is going to do. That's it. All right? I hope today was important. It's half an hour long video because there is so much psychological mismanagement in the community now that I would like to remind you once again that what I'm teaching you guys is not how to be overconfident and just feel like you're the best trader out there, whatever it is. No, when you flow trading, the only thing you need to be comfortable with is handling chaos that is implied by volatility. The volatility is going to bring the fear of uncertainty in your brain up to its highest levels. Because of course, that means the market sometimes does nothing, sometimes does overreacting things. And you will try to make sense of these things. This is what your brain has been programmed to do, to make sense of chaos. But the thing is that, boys, this is fucking chaos. There is just one step going to say that this is just absolutely raw manipulation, that these guys are releasing freaking fucking information all the time to just fuck up with your brains. Though I've always said it, and I'll say it once again. If you want to learn flow trading, there are two things you can do now to be more consistently able to apply the rules until you have applied them long enough to fully understand that you can't lose money out of 100 trades. If and only if you do the same things in these 100 trades. If for whatever reason you decide, yeah, on this one, no, I'm not going to do it because there is too much bearish sentiment. No, just do it, okay? Think out of 100 trade. As long as you don't change the rules, you can only be profitable. Second thing is, if you're too uncomfortable with fear of uncertainty and lack of patience, do this. Two things that helped me progress back then and will definitely help you. Everyone knows about it, but you're too focused and pathologically focused at some point that you forget about these. So hear me very well. Number one rule to go back and control when you're in fear of uncertainty kind of territory: reduce the fucking position sizing. Okay, if you feel like it isn't going right and you have too much mental tension, well, instead of just cutting everything off, like saying, okay, this is too much to handle, I'm cutting the trade. No, don't do this. If you are under so much pressure that you have to cut the trade, do a partial cut. Like cut the trade by half, and you'll see that the psychology goes immediately back up to normal. Most of the time, and too big of a position sizing is going to force that fear of uncertainty to just overwhelm you. So reduce instead of cutting off the trade. That's number one rule, okay? If you feel like you have to cut it off because it's too much to handle, well, cut it by half and wait another week. And you'll see that you will retake control over that too much violence in your brain, okay? And the second thing, the fear, the lack of patience. You have to work your way out of this. There are no tricks to learn patience in the market, but just consistently being in these irrational moments in which prices accelerate and then slow down and accelerate again and slow down. There's no other way around but to just say, gosh, I tell you all the time, there is no way you can control this. Though Jesus freaking fuck, drop it. All right? The only way you can succeed as a trader is by learning patience and learning that time is a variable. It goes faster and slower all the time, and there's no way you can predict what's going to happen. It's certainly not the words of a central banker that is going to change anything. You'd rather like to have a technical approach of trading and do it well rather than trying to know what the heck is going on in Powell's brain. Most of the unsuccessful traders that I see out there are the ones who pay attention to this. If you're in a flow trading environment, fuck up every news flow. Just don't listen to it. Don't try to make sense of it. They're just noise in your strategy application. Just try to remind you once again, write it down. What are you doing? What are the rules? How are you applying those rules? Should you do something? And if the answer is no, which is going to be like 99% of the time, you shouldn't do anything but to wait and do not let information interfere with your strategy. Well, just try to go along with it. Most of the time, there's nothing you can do. And most of the time, there's nothing you have to do and nothing you should do. So just try not to convince yourself that there's something that has to be done. All right? I know it can be painful. I know it's difficult, but there's only one way forward in trading. It's learning how to overcome these fears that just stops you from being a profitable trader. Okay, the rules are simple. The only way you can fail to apply them is because for whatever reason you convinced yourself that you had to act differently. Don't do it. And if you fail on doing it, just reduce the position sizing. Gosh, there's no other way that is ever more efficient than this one to regain control over too much mental pressure. Okay. Too much today. I know it's a long thing, but I feel like it had to be said once again. I hope it will help you guys. That being said, see you guys later.